Hello, everyone. Today, we'll be taking a closer look at Alphabet, the company behind some of the world's most well-known products, including Google Search, YouTube, Google Cloud, and the Gemini AI ecosystem. Alphabet is one of the most influential technology companies globally, with products that serve billions of users every day. In the third quarter of fiscal year 2025, Alphabet delivered a very strong set of results. The company generated over $102 billion in revenue, representing 16% year-over-year growth, and marking the first time Alphabet has surpassed the $100 billion quarterly revenue milestone. Net income reached approximately $35 billion, up 33% year-over-year, highlighting Alphabet's strong profitability and cash-generating ability even at massive scale. These results were supported by continued innovation driven by artificial intelligence. Gemini is being deeply integrated across core products such as Chrome, Google Search, and the Android ecosystem, enabling more conversational and immersive search and shopping experiences. In advertising, AI Max has quickly become Google's fastest-growing AI-powered ad product, expanding query volume and attracting a growing number of advertisers. Together, these developments underscore the central role AI is playing in enhancing both user experience and business performance across Alphabet's ecosystem. Now, let's take a closer look at Alphabet's revenue mix. Advertising remains the company's largest revenue source, accounting for approximately 73% of total revenue, or $74.2 billion. Within this, Google Search generated $56.6 billion, representing about 55% of total revenue and growing 15% year-over-year, continuing to serve as Alphabet's primary cash engine. YouTube ads contributed $10.2 billion, or roughly 10% of revenue, also growing 15%, highlighting the increasing importance of video and TV-style advertising. Beyond advertising, Google Cloud generated $15.2 billion, representing around 15% of total revenue and growing 34% year-over-year, the fastest growth across all business segments. This strong performance reflects rising enterprise demand for AI and data infrastructure, positioning cloud as a key long-term strategic growth driver for Alphabet. In addition, subscriptions, platforms, and devices contributed $12.9 billion, or approximately 13% of revenue, growing 21%, driven by YouTube Premium, Google Play, Pixel devices, Google One, and AI services across the Gemini ecosystem, including newer models such as Veo 3. Notably, Alphabet now has over 300 million paid subscribers across its services, providing a high-quality and recurring revenue base. Next, let's look at Alphabet's revenue trends over time, from fiscal year 2023 through the third quarter of fiscal year 2025. Overall, Google Search continues to deliver steady and durable growth, with revenue increasing consistently quarter over quarter and reaching $56.6 billion in Q3 FY25. This highlights the long-term strength of Search, even as the advertising market evolves. YouTube also shows a solid recovery and growth. Advertising revenue has rebounded following a slower period, reflecting improved monetization across video formats, particularly Shorts and connected TV. This reinforces YouTube's growing role within Alphabet's advertising ecosystem. The most notable trend in this chart is Google Cloud. Cloud revenue has accelerated meaningfully and delivered 34% year-over-year growth in Q3 FY25, the fastest growth among all of Alphabet's business segments. This performance reflects rising enterprise demand for data infrastructure and AI solutions, positioning cloud as a key long-term growth engine for the company. Meanwhile, subscriptions, platforms, and devices continue to grow at a healthy pace above 20%, contributing steady incremental revenue. In contrast, Google Network advertising remains relatively flat to slightly declining, indicating a more mature business that is no longer a primary growth driver. Overall, this chart illustrates Alphabet's ongoing transition toward a multi-pillar growth model, where search provides stability, while cloud and subscription-based businesses increasingly drive future growth. Looking at the broader digital advertising landscape, Google continues to hold a clear leadership position globally. Based on early year forecasts, Alphabet's total advertising revenue in 2025 is estimated to exceed $200 billion, significantly ahead of competitors such as Meta, Amazon, and ByteDance. This reflects the structural advantage of search advertising, where Google captures user demand at moments of the highest commercial intent. The primary growth driver for search comes from AI-powered enhancements, particularly AI overviews and AI mode. Both total query volume and commercial queries continue to grow, effectively reversing earlier concerns that AI could weaken the traditional search model. AI overviews now reach more than 2 billion users while maintaining monetization levels comparable to traditional search. Meanwhile, AI mode has reached approximately 75 million daily active users across more than 40 languages, with query volume doubling within a single quarter. On the advertising side, AI Max has quickly emerged as Google's fastest-growing AI-powered search advertising product, generating billions of incremental queries. More importantly, advertisers are seeing measurable performance improvements, with Kayak reporting a 12% increase in conversion value and SoFi achieving a 39% increase in conversions. The strongest growth is coming from retail and financial services, with increasing contributions from healthcare. Overall, AI is expanding the scale of search and reinforcing Google's long-term competitive advantage, even as computational cost management remains a key challenge to monitor. Next, we look at YouTube's key metrics. In terms of scale, YouTube has grown consistently over many years and is approaching 2.8 billion users by the end of 2025, highlighting its near-global reach and continued expansion. Alongside user growth, YouTube Premium has also scaled rapidly. Paid subscriptions are estimated to reach approximately 150 million by the end of 2025, representing a compound annual growth rate of over 50% since the service was launched. This reflects a clear shift from a purely ad-supported model toward a hybrid model combining advertising and subscriptions, helping YouTube build a more stable and higher-quality revenue base. From a geographic perspective, YouTube maintains broad global penetration. India is the largest market with around 500 million users, followed by the United States with over 250 million users. In addition, fast-growing markets such as Brazil, Mexico, Indonesia, and Vietnam continue to contribute significantly, supporting YouTube's long-term growth trajectory. Next, we look at the share of TV viewing time in the US across streaming platforms. By November 2025, streaming accounts for approximately 47% of total TV viewing time, highlighting a clear structural shift away from traditional television toward digital platforms. Within this broader trend, YouTube has emerged as the primary beneficiary. Specifically, YouTube captures nearly 13% of total US TV viewing time, significantly higher than other streaming platforms, which generally range between 3% and 8%. This demonstrates that YouTube is not only leading within streaming, but is increasingly becoming a core destination for TV viewing on the big screen. Notably, YouTube's first exclusive NFL broadcast attracted around 19 million viewers, setting a new record for the platform. This milestone underscores YouTube's successful expansion into premium TV and live sports content, reinforcing its position as one of the largest TV viewing platforms in the US and creating substantial long-term opportunities for advertising and premium monetization. Next, we turn to Google's AI segment, with a focus on Gemini. Looking at the web traffic chart for Gemini, after a relatively flat period in the second half of 2024, usage began to accelerate sharply in early 2025, reaching over 1.3 billion monthly web visits by year-end. At the same time, Gemini's market share has remained relatively stable at around 13 to 15%, indicating that recent growth is being driven primarily by deeper and more frequent usage, rather than distribution expansion alone. This trend is clearly reflected in operational metrics. The Gemini app now reaches approximately 650 million monthly active users, with query volume tripling quarter over quarter. Across Google's ecosystem, monthly token processing has reached roughly 1.3 quadrillion tokens, representing a 20-fold increase year over year. On the developer side, Google's AI APIs are processing around 7 billion tokens per minute, and more than 13 million developers are now building applications using Google's generative AI models. In parallel, VO3 has seen rapid adoption, with over 230 million videos generated, and is being deeply integrated into YouTube and marketing workflows, enabling large-scale AI-powered content creation. On the enterprise front, Gemini Enterprise has surpassed 2 million paid seats across more than 700 companies, highlighting strong demand for AI-driven productivity tools. Nano Banana Pro, a newly launched product, has also received very positive early feedback, further demonstrating the expanding breadth and real-world adoption of Google's AI ecosystem. Next, we turn to Google Cloud, a business that is benefiting directly from the global acceleration of AI adoption. Looking at the global cloud infrastructure market share, Google Cloud, while still behind AWS and Azure, has steadily expanded its share from around 9% to over 13%, indicating a clear improvement in its competitive position within a rapidly growing market. This market share expansion is accompanied by a meaningful improvement in the quality of growth. Operating profit increased by 85% to $3.6 billion, driving operating margin expansion from 17.1% to 23.7%, which suggests that Google Cloud is entering a phase of more profitable, structurally driven growth, particularly supported by strong enterprise demand for AI infrastructure. From a longer-term perspective, backlog has grown significantly to approximately $155 billion, alongside a 34% increase in new GCP customers and a rising number of large, multi-year contracts. Today, more than 70% of cloud customers are using Google's AI products, underscoring AI's role as the core growth engine for the business. That said, the primary constraint remains infrastructure capacity, as demand for AI continues to outpace the expansion of data centers and server deployments, despite elevated capital investment. This creates near-term pressure, but also highlights substantial long-term growth potential as capacity scales. Looking at the income and expense structure, Alphabet continues to deliver strong profitability. From $102.3 billion in revenue, the company generated $31.2 billion in operating income, representing a 30.5% operating margin. Excluding the $3.5 billion European Commission fine, operating income grew 22% year over year, with margins expanding to 33.9%, highlighting continued improvement in core operating efficiency. Net income reached $35.0 billion, up 33%, while EPS increased 35% to $2.87, supported in part by other income from investment gains. On the cost side, cost of revenue rose 13%, driven by infrastructure and operating expenses, while operating expenses increased 28%, largely due to a 22% rise in R and AMP winking and laughing spending related to AI compensation and depreciation. Notably, sales and marketing expenses remained largely flat, underscoring Alphabet's prioritization of technology investment over go-to-market spending. At the same time, capital expenditures reached approximately $24 billion in Q3, with 60% allocated to servers and 40% to data centers. Alphabet raised its full-year 2025 CapEx guidance to $91 to $93 billion, with further increases expected in 2026. Depreciation rose 41% to $5.6 billion, reflecting the rapid pace of AI infrastructure deployment. New compute capacity includes A4X Max systems powered by NVIDIA GB300 GPUs and the upcoming TPU V7 Ironwood, amid extremely strong demand, highlighted by Anthropic's plans to utilize up to 1 million TPUs. From fiscal year 2022 to Q3 FY25, Alphabet shows a clear recovery in growth and profitability. In late 2022, net income declined sharply, with one quarter down as much as 34% year over year, while quarterly revenue remained around $70 to $76 billion. From the second half of 2023, the trend reversed. Revenue increased steadily from $76.7 billion to over $100 billion, while net income grew faster than revenue, with several quarters posting 50% plus growth. In Q3 FY25, revenue reached $102.4 billion. Net income rose to $35.0 billion, plus 33% YOY, and EPS increased 35%. The most important shift is in net margin. After bottoming at 17 to 18% in late 2022, margins recovered to nearly 30% in 2024 and reached approximately 34% in Q3 FY25. On a trailing 12-month basis, net margin stands around 32%, among the highest across global large-cap technology companies. Notably, this margin expansion occurred alongside sharply higher AI and CapEx spending, indicating that search, YouTube, and cloud are delivering increasing operating leverage rather than being diluted by investment. Looking at operating expenses, Alphabet's AI-first strategy is clearly reflected in the cost structure. R&D, winking and laughing, spending increased steadily from $9.1 billion to $15.2 billion, implying a CAGR of around 21%, driven by investments in AI talent, infrastructure, and model development. Sales and marketing expenses remained tightly controlled, growing at only around 2% CAGR, indicating that growth is not being driven by higher marketing spend. General and administrative expenses were largely stable across prior quarters, but spiked to approximately $7.4 billion in Q3 FY25. This increase was driven primarily by the $3.5 billion European Commission fine, which is typically recorded under G&A, alongside higher legal and compliance costs as Alphabet scales its AI and cloud operations globally. On revenue, from FY23 through Q3 FY25, Alphabet's actual results have closely tracked market estimates, underscoring the predictability and stability of its core business. Recent quarters also showed modest upside versus expectations, confirming the resilience of advertising and cloud. Looking ahead, consensus expects 2026 revenue to grow around 14%, reaching approximately $455 billion, driven mainly by Google Cloud and AI-enhanced advertising. By contrast, the bigger surprise in recent quarters has come from EPS performance. Over the last several quarters, actual EPS has consistently exceeded estimates, reflecting stronger than expected profitability. EPS reached $2.81 in Q1 FY25, $2.31 in Q2 FY25, and $2.87 in Q3 FY25, each time beating expectations. This outperformance has been driven by margin expansion, investment-related income, and share buybacks, allowing EPS to grow faster than revenue. Looking into 2026, investors are more cautious, with consensus forecasting EPS of around $11.20, or roughly 6% growth, as AI and infrastructure spending remains elevated. Investor sentiment toward Alphabet stock remains strongly positive. Based on the latest consensus from approximately 66 analysts, the average 12-month price target is around $335, implying roughly 6% upside from current levels. The bull case exceeds $430, plus 37%, while the bear case is near $268, minus 15%, reflecting confidence in long-term growth driven by advertising, Google Cloud, and AI adoption. In terms of ratings, the majority view is strong buy, with 55 analysts assigning that rating alongside fewer buys and holds. This indicates broad institutional support and favorable expectations for Alphabet's earnings trajectory and strategic execution. Thank you for watching. The information presented in this video is based on sources believed to be reliable and is for informational purposes only. It does not constitute any investment recommendation or advice.